There's one strategy that actually became very viral about 5 years ago and that a lot of people have been using throughout the years. Nevertheless, it's true that it has been like kind of forgotten during the way and not that many people are actually using the strategy. However, it is still a very profitable strategy. Hi everyone, this is Christian here on YouTube and welcome to a brand new video for the channel. In today's video, I'm going to talk about the stochastic strategy for Forex trade. And I'm going to give you a full tutorial as to how you're supposed to use it, how does it work, the accuracy, and more importantly, how you are supposed to set your trade so that you can make money with this specific strategy. So if you're new to my channel and you're into binary options, Forex trading, crypto trading, or any type of making money online, this channel is for you. Make sure you hit that subscribe button below and activate the notifications bell icon so that you get a notification for every new video that I upload. With that being said, let's jump into the video. All right, everyone, so I'm right here on my TradingView platform and we are about to start. So the first thing that I'm going to do is that I actually have it in candlesticks. I'm going to put it in 1 hour candles. Why? Because with this strategy, we're actually looking to make a little bit higher volatility than usual. And when it comes to daily charts, you usually have only a couple of trades, even within a few months, to place with this strategy. However, with 1 hour candles, you're going to be able to have more trades. This is a day trading strategy, which means that it will take about 3 to 8 hours for you to actually close it. And we are going to see it right now. Okay, so once we are actually in 1 hour candle, I'm actually looking at Euro USD. We're going to go to indicators, and in indicators, we're going to type stochastic. And this is what we're going to find, this stochastic. The public library will show a lot more, but we are supposed to just look at stochastic. So we actually click on it and we can add it to favorite if we want to. And this is how the strategy actually looks like. Now, the way the strategy works is very, very damn simple. These are the levels that the actual indicator finds, the 80 and the 20. Everything between them, it means that the market is kind of normal. Nevertheless, when the price of the market actually goes above the highest level, which is 80, or below the lowest level, which is 20, we're talking about a point of retraction, okay? Again, and I just want to say this up front, of course, this is not a 100% in the money strategy. We always have some trades that we win and some trades that we lose, but it's a very profitable strategy. So getting back to the point. So in this point, we look at a retraction, and in this point, we look at a retraction as well. How is it that we're going to do it? It's very simple. The way we're going to do it is that at the moment that we actually see this is when we are going to enter a sell position. Okay, when we see the retraction, usually it's actually better to wait for the next one so that it actually is in the crossover, but you can actually enter before. In this area, for instance, this is the one, right? So here you enter a sell position, okay? Now, how long is this going to be a sell? It really depends on various things. One, that the actual stochastic oscillator goes all the way to the lower level. Once it reaches this level, then I would say this is a good time to close the trade. You can wait and it dropped a little more, but it would be too risky. So my recommendation is enter here and close right here. And the same thing here. This one is not going to be an entry point, and this one is going to be enter here and close around right here. Okay, so let's go ahead and give that a try, shall we? We're gonna get a long position on the first trade. That this one, it was this one right here. I would say this one, it was around right here. So we're gonna be fair, it was around right here. So this one, and let me just go ahead and make it shorter, because it was supposed to expire around this area, right? So if we set it for this area, we are like in this candlestick, at the end of this candlestick, it will be around that area. The stop loss, you can set it for around here. I would say like around, let's say 15 pips and 39 pips in profit. So if you notice right here, we were able to get into this position. It dropped a little bit because it had a strong resistance or support level here, but then boom, it started jumping and we were in the money. So therefore, we looked at this trade was profitable, right? Now we're gonna take a look at this short position. The short position, I would say enter in this candle as well. So here, and as well, the stop loss will really be up to you, but my biggest recommendation is that you actually have at least 3 in risk ratio, okay, in risk reward. So this one, I would say that you should close it here before it starts retracting, because it looked like it was going to retract. So it's around, let's just go ahead and see, around here in this candle, right? So what we're gonna do is that we're actually going to bring it all the way over here. Okay, there you go. So here you go. You can set this take profit wherever you want. I would say at least 15 pips just in case. And here, this is the beauty of this specific strategy, that you're not supposed to like really jump and put what is going to be your take profit immediately, because you don't know how much is going to drop. But I would say go to like 15 to 20 pips in profit and then keep on moving it around. If you put it at 15 or 20 pips in profit on this one, it was in the money as well. Obviously, we're gonna have a lot better opportunities and more entry points, but let's go ahead and see right now one short position that was a loss. This one right here, in this specific area, boom, you entered, right? But guess what? Unfortunately, the trade actually went on the opposite direction. You can set it for around here, 15 pips, and you set it for 20 pips. Then as you can see, it didn't like go to the right direction and it continued dropping. Nevertheless, here is a good point to enter if I were to enter right now, because I know that it's going to continue dropping because of this. Boom, boom, boom. It's going to continue dropping. So this is how you actually manage to place the strategy. Let's go ahead and take a look at another example a little bit behind. I don't know, let's say around here. Okay, we have a few options here. Take a look at this one. You should have entered in this position in this area right here. Around right here, I would have entered this position. So it would say around this position, right? This is a sell position. So maybe with this one, we would have lost it. Let's see, around here, a sell position. I set it for 15 pips, right? And I said to take profit for 20 pips, and boom, you actually won it. One thing I would recommend you as well is that you can actually hold your position, all right? Don't actually set a stop loss that low. I would even have like, I don't know, like a 60, 70 pips take profit going forward to the next resistance line. For instance, this one right here, I would go over there and place my stop loss in there, and I would go and take my profit on the next one, on the next support line as well, which would be around right there. So if you can see, now we're actually extending the strategy a little bit better. I'm not saying it's always going to work, but it's always good to be patient. If you notice, even it started dropping all the way, it even continued to moving around, and it dropped all the way over here. So at the end, you ended up making some good money, right? Now, this long position, as you can see, it would be a loss as well. So what you need to do is the following. In order for you to avoid all these messed up numbers, is actually to look just for the highest and the lowest levels, just like, let me go ahead and show you. When you actually, like for instance, you don't look for a stable market. This is a stable market. You see it? This is a stable market. You stay away from it. We don't need it. What is it that we need? We need big jumps and we need big drops like this one, okay? That's what we need. We need big jumps and we need big drops. If you want to, you can use a 50 moving average, just like, you know, as an extra confirmation in order for you to see, okay, this is a huge uptrend and now it seems right here like it's going to drop, like in this area. Because look, if it's going up all the way like stronger like it is right now, you're not supposed to enter here, right? So what you do is that you actually enter for a short position on this specific spike right here, boom. And what you need to do is actually move your take profit, let's say 50 pips, and your stop loss could be like 50 pips as well. It's a one win risk reward ratio, but if the price continues to go in the right direction, then you can keep on moving your take profit and you can take it all the way. Why is it that we enter in this specific position? Because as you can see in this area, it reached the highest point. So then boom, it started dropping, right? You can do a couple of things. You can close your position around this area because you thought, okay, there's going to be a retraction here and you will still gonna make a lot of profit. You would have made 60 pips in profit, right? But it's really up to you. That's what I would do so that, you know, we don't make it that much complicated. But let's go ahead and take a look at a different pair just to have a clear idea about this specific strategy. So we're gonna look for a huge jump. Okay, let's take a look at this drop right here. Take a look. It has been dropping and then boom, it jumped a little bit, right? So this would have been a good entry point. So what you do is that you're actually gonna place a long position, this candle right here, boom, and you're gonna set the take profit and stop loss. The take profit right here, the stop loss, let me see if I'm not mistaken, it's 40 pips. I'm gonna put it for 50, and I'm sorry because I moved it. It was around right here, was it? I think it was right there on this candle. And the take profit, we're gonna put it at 60 as well. And this is what the trade will actually look like. Okay, so like I said, it could jump more, it could not drop at all, but in the end, it's like around a 60 to 70% in the money or accurate strategy. So we're talking about, like, remember, and please remember this all the time. If you lose 2% of your balance, right? Because that's what you're risking. And if you win depending on the win ratio, 2.27. So that means that if you win, at least you're going to make 4.5%, pretty much. So you're talking about if you win 3 positions and you lose 3 positions, you lose 6%. But if you win 3 positions, so 4%, you make 12 minus the 4%, you at least make 80% out of those specific trades. So remember always to manage your risk reward ratio good. Hey, so I hope this video really helps you guys out. Let me know if you tried this strategy and make sure that you actually test it on demo. And in case you guys have any questions, you can put them in the comment section below and I'll be glad to answer those comments as soon as I can. Thank you for watching this video. Don't forget to smash the like button and I'll see you on the next one.